welcome everybody. Today is the 20th. Happy 420. And this is our live training. And we have some big things happening at EFXU. And because of that, which if you're in there, we're going to drop a big announcement probably later today or tomorrow. And this is kind of an extension of that. So what we're going to be doing is letting Mirko take the reins today. Mirko is somebody who's been part of EFX for quite some time now. He has really risen the ranks and he's just been crushing it with the trading, right? I mean, it's always good to see people who have walked through the same door as you, who are just able to apply a system, right? A proven system, a blueprint, step-by-step system that can take you from point A to point B, right? And now Mirko is not only a full-time trader, but now he's part of the EFX team, right? And he's a big part of the EFXU community. And now we're going to be implementing live trainings with Mirko and a few other people. So today we're going to have Mirko run today's live training. He's got a great topic for you guys that he's going to run through. At the end of it, he's probably going to run till maybe 11 or 11:50-ish, 10 of, and then he can pause it at the end and go through some questions. So without further ado, I don't know, Mirko, if there's probably a lot of people who are tuning into this call, and I don't know if you know how I do it. If you want to just get into a little bit, you can also share a little bit about yourself if you like to.
Sure, yeah.
Jump into the charts. I mean, I'm going to give you full reins to do what you want to do. I'm gonna turn off my video. I'm gonna mute out, and then you can fully take over. You host, you can share. You're good.
Yeah.
I've
got everything ready to.
All right, so I'll be here, but not fully here. I'm gonna mute out, and then you can do your thing. So everybody, give Mirko a warm welcome. Drop some fire emojis in the chat. Mirko, do your thing.
Hey guys, welcome to my very first live training. I am super excited. I hope you guys are too. I don't know if you guys know me, some of you do, some of you don't. I've been around Danny since the very beginning of my trading career. Basically, I started in August 2020, and my very first steps were with Danny. Like, I never had to go through anyone else, and for that I'm super grateful, because obviously it got me to where I am now. Again, super excited, and I hope I can give you ton of value today. We are going to analyze Euro USD. I'm going to do a nice top-down analysis of Euro USD. If you guys know me, you know that I mainly trade Euro USD. So I thought I'd give my 2 cents on a pair that I really love, and I found quite easy to trade. Although last couple of weeks have been slightly, well, not the best, really. Love to see all the fire emojis coming in. Welcome to all the new people that are coming in and joining in. I know I'm not Danny. If you guys just come in, I'm not Danny. I'm a little bit prettier, but let's leave it at that. So I am going to share my screen now. Just 1 second. Right, there you go. So you should all be able to see my screen. Let me wait a second. Let me see. Here we go. Oh, there you go. Perfect. So, top-down analysis. Yeah, what's up?
But before you jump into it, sorry to interrupt you. Do you have, since you have a white background, do you have like a mouse highlighter you can use?
I am not too sure.
If not, then we can just get it sorted for next time. I just figured I'd throw it out there, because sometimes white screens are tough.
Okay, I can, let me see.
But if not, don't worry about it and just dive right in.
Maybe the thingy has it on itself, no? No, it doesn't. I was checking if...
yeah, if you don't have one ready to go...
No, I don't.
Don't worry about it. Just hop into it.
Awesome. So I can change my background quickly, like just go in dark mode.
No, you're good, man. Just do your thing.
All right. Cool. So 1 second. Just stop me. Cool. So let's do a top-down analysis of Euro USD. Top-down analysis is basically you see the highest time frame picture possible of a pair, and then you're trying to work in a directional bias through lower time frame entries to get yourself in alignment with microstructure, trend, and just to hop on to the classic smart money concepts ideas, which is basically following the bank's footprints. So if we start on a monthly view, what I first see over here is pretty much a let me put this one black, a lower high and a high high. Sorry, higher low and high high. So right now we are in a pullback mode. Obviously this is monthly, so just keep in mind that we just like this happened in 2001. So we might end up in the future back here. That's not necessary. What I want to focus is more of a price action that we're having right now. But just in general, it's good to know that on a monthly, we are bullish, as bullish as we can be with about 20 years of price action. Diving in a little bit more into what the recent price action looks like, starting from around 2013 in February, we have had these very strong impulse to the downside, as you all can see, which left quite a bit of imbalance all around, right? Which this one has been filled already. So we definitely have motives for price to come higher. And how can we gauge the fact that we believe the price can come higher is from the bank's footprint. So once we had this very strong impulse, we then begin some sort of accumulation. This is where price is basically creating ideas into retail traders, which are, as you probably know, probably putting sell stops right below these lines, who are selling above this resistance level. Some of them are buying off this buy level, and they're basically creating opinions. These opinions are the opinions that we use to get to the position of basically making money off of them. So when price came down here, we had a an accumulation of equal highs and then equal lows. So we're gonna do this. We're gonna put a little money sign. We're gonna put a little money sign here. Then we had a liquidity grab, an FU candle, this monthly candle, and the price straight away shot all the way up, grabbing this liquidity and grabbing this liquidity. What happened here? Here happened basically that the smart money concept, that the banks got involved into the market. They loaded up on this position, right, down right here, and then they took price high. After this movement, we had a very nice flag coming back, which did not actually tap the monthly candle, the FU candle. Let me just make this one black, small line, so it's a little bit easier to see. Let me just do this. Here we go. So we didn't really tap the monthly candle. That does not mean that price now is done and won't come ever again here. That might mean that we might be looking for a bypass pattern. If you guys don't know what's a bypass pattern, basically banks have created a cause, which is this one, with more liquidity to potentially grab before moving higher. So after price came back into this area, we had another very strong impulse right here, which did not break the high. So we still have quite a bit of money sitting up here. We did not break the high, and instead price started to come down again. So what can we gauge from this recent price action? First, we can gauge that we are still bullish, although we are playing shorts. Why are we still bullish? Because, let me show you 1 second. We are still bullish for few reasons. Imbalance here. We have broken the low here. Therefore, we might be in an actual higher time frame pullback mode where we come into this area and then we're going to come down. Three, the way the shorts are being played compared to the strength of the buys is quite the difference. And where are most of the retail traders putting their stop losses, where are they putting their, where is basically the money is extremely important. So I'm just going to delete this and I'm going to show you something just to have a little bit clear view. Right, so cool. So once price have done this enormous push, we have played into a very important area, which I'm going to highlight right now. Here we go. I'm going to make this color. Actually, this one can go even a little bit further back. So we are in a very important area. If you guys know why, it's because of a break and retest there. So basically price came down, broke into it, and then retapped this area and then started to come down again. So obviously most of the retail traders were and still are shorting up here. What does this give us as an idea is that price will definitely come higher than this because that's where most of the money are. Before coming up here though, obviously they need to load up on positions. And this is why, in my opinion, we are coming lower so that to grab more liquidity, tap this monthly candle, and then we're going to come up. So this is more or less how you can create, not more or less, this is how you create a higher time frame bias based on price action. So the bias is, as I said, price going to come down here, tap this monthly candle, and continue for higher prices, So after we have gauged more or less our monthly bias, we're going to go down 2 time frames. That's what I usually do. I'll go down to the daily time frame. And I'm going to analyze a little bit more the recent price action. So first of all, as I said, we have played, this was that monthly candle. So we have basically just begun to short in that monthly candle. And we are very close to our other monthly candle for bias. Actually, I'm gonna put B. So this is monthly candle for bias. And throughout this period, we had several changes of higher lows and lower lows being put in place, which most of them actually have never been mitigated, if you want to call it this way. Which led us to our most recent price action. So as you can see, we've been quite bearish on the daily, and we have certain areas that we can look at for potential entries. First of all, in the most recent price action, we have this, which is a classic signature pattern, something that we advertise as our signature pattern because of just that it's one of the easiest way to spot banks coming in place. You have a FU candle, a liquidity grab, and straight after you have an opposite direction reaction. And this liquidity grab is extremely important because it happened on another break and retest level, which I'm gonna highlight right here. So obviously when price came down, most of the people were short in these areas, and you can see all these wicks coming in, which are basically stop loss, and then smart money came in, grabbed all this liquidity, and then came down. So our bias then would be that you would be looking for something like this, which is not bad at all. That's something that I personally am looking as well. But this might take a few more days, or this might take even a couple of more weeks. This happened on the 30th of March, and then we are right now on the 21st of April. So this is a month of price action. But before diving deep into this, I wanted to have a quick look at what happened here, and if there was a way for us as smart money traders to get involved into these price actions to make the most out of these moves, even though we are waiting, for example, on higher time frame moves. So we were waiting for price to come into this monthly candle, as I said. That does not mean that I shouldn't be able to get involved into this price action, into this market, following the banks, knowing that they're going to go down or they're going to go up, and whatever is the case. So, for example, we had a area over here that I remember we were looking at back in July. We had this area over here that we were looking back in in May. So how do you know when to get involved into these areas? First of all, that depends on your trading plan. Following the banks is important, but you have to always have a plan in mind. And that obviously comes from experience, that comes from trading for a long time, that comes from putting in the works, being patient, and getting the works in so that you can get to a point where you can just read the chart and from past experience that that's exactly what is going to happen. So starting to analyze from up here, we had an FU candle, as you can see up here, and then price just starting to not slowly, they were actually quite strong impulses here. We had quite a bit of break structure, but we never actually broke the very strong low. And if anything, it most likely looked like we were going to play this area and then continue higher. Oh, we didn't. But we saw these movements, we saw the strength of the moves, we saw how price was going, so we definitely could have capitalized on a few occasions. And the strongest occasion that I remember and that I actually traded was this one here. And I think it's something that Danny he did the trading on this in this area as well. And if I remember correctly, was on a slightly lower time frame. So let's just go tiny bit lower. Let's go on a 4 hour. Let's go. Awesome. So first thing that comes up in front of my eyes is just the choppiness of the buys here, the choppiness of just how price is buying compared to how strong are these impulses. When you guys are looking for a price action, always the things that you should be mindful of is this. Compared to this. Sorry, let me just do this back. Why am I saying this? Because this price action, which actually didn't come out really pretty, but this price action is basically what I mean by choppy. When you don't see the strong impulse, when you see more of the flag, the classic flag, which is a contraction being put in place. So when you see price, when you see a strong FU candle, and then you see that nice flag back, then you know that that's a pattern that you should definitely be looking at. So when it came to, let me just see something. Let me just zoom in a little bit. Right. So when it came to this area, and remember we are kind of trading into a monthly candle. We had a huge liquidity grab. Let's put it as a hunt up. And then you had a break structure, which was the most recent structure. And let's do the US down. So the first things that we were all expecting was pretty much just a pattern to form into this area. So how do we gauge where to get our pattern? If you've been around Danny for a while, you know that we are pretty much fib retracements lover, and we know for a fact that price, every time you have an impulse from a higher low to a higher high, or from a lower high to a higher low, and all of that, you always get some sort of retracement. And that retracement tends to happen in our kill zone. Our kill zone, which is between the 71 and 78. So let's just play this one a little bit. Right. So when price began to come back up, that took quite a few days. And when it came all around this area, although it came quite close, I remember we're talking like almost kissed the stop loss up here, it still showed the bearish intent, the bearish move, which happened right here. So once this has been established that we are looking like, you know, that price has been running shorts, that's when you begin to look for pattern inside these kill zone areas. But simply because if you would be looking at, I don't know, short in this candle, for example, talking about 57 pips stop loss, that is quite the stop loss. That is quite big. How is this relevant? This is relevant because what we're trying to do as smart money traders, and which I think is one of the most important bits as smart money, is having high risk to reward trades, which are done by having not the biggest stop loss and very solid targets to attack. So rather than just waiting for a break and retest or support and resistance and all of that, we wait for the patterns that the banks left, give us the highest risk to reward based on all the conferences that we have, and that's how we get our gains. Having a 57 pip stop loss, considering that our most probable area of coming out will be the previous low, so let's say around here, we're talking about a 3% gain. So that is not really ideal. So what do we do then? We wait for patterns to form into these logical areas so that we are more that we are able to have a tighter stop loss with a higher risk, sorry, not higher risk, so with a higher reward, so that we can get the most profitable position that we could potentially afford. So when banks are getting involved into the market, you always need to remember that there is a transaction going on. There is money involved. There is somebody that is like buying and there is somebody that is selling. When banks get involved into the market, you always have very huge moves because of the volume that is being traded by the banks. When you have a huge liquidity grab, such as this one, and you know that the banks got involved into the market, you know that the most probable place where they are going to release this money that they got is the previous low, previous day low, previous week low, areas of equal highs, areas of equal lows. So after we had the liquidity grab up here, and we saw the price came down, and we created this new low down here with kind of a double bottom, kind of equal lows. The only place that they could go after this move is basically just come back into here and keep on going down. And this is pretty much what happened. And we had, sorry, let me just move this one back so I can show you the pattern that I was talking about. And we had a bias. This was back in August. So we had our bias, which is basically price came up into this area, into the kill zone, show with the bearish intent. We had several breaker structure down, another breaker structure down. Oops, let me get rid of this. So once prices come in here, we have to do something about it, right? We have to somehow get involved into the market. So what do we wait for? We wait for a pattern that pretty much looks something like this. This is when it comes to shorts, obviously. If it would be the buy, you would pretty much flip this. And this happened right here. And I remember, I'm pretty sure I took this trade just on a lower time frame rather than the 4 hour. But we have I just want to go through this quickly because I wanted to show a nice trade that happened, even though we know that we are bullish on the pair. we can still take certain pullbacks, so we can still take certain action when it comes to price, just not being the way we want it to go. So what did we have here was a consolidation. So we had a equal highs, equal lows being put in place. I'll call this range. And then we had a spike up and a strong breaker structure, which also, besides taking this low down here, it broke the most recent structure on the left. So what do we do again? We grab our Fibonacci 2, we throw from the high to the low. This is our kill zone. And now it's really up to your trading plan, how you guys want to do it. Sorry, let me do this. It's up to your trading plan how you want to do it. Do you guys trade off the 71? Do you trade off the 78? Do you trade off the 88? Let's say just for the interest sake, we're gonna do the 71. 23 pips. This is pretty much halved what we were looking at before. With the same TP, we're talking about 7% gain. If you risk 2%, that's 14% gain. While if you were taking the whole area, you were talking about 3.5%. So you see how following price action and waiting for the right opportunity can get you better risk to reward gains compared to taking like the huge candle or just an area that might not be too interesting. Let's just play this out. Nice. I love to see a solid price action. Took a while, but he actually ended up there. He slammed all the way down. So price came up quite strong into it, obviously. Sorry, not obviously, as in came up quite deep. So you could have taken the 78 or you could have taken the 80 at 6. You still would have get solid gains. But the lower the stop loss, the more tighter you go into the stop loss, the higher the chance that you might miss the trade. So just for the sake of the experience here, we'll take the 71. That would have been a solid 6% gain, almost 7. Price kept on going down, and as you can know, we just went to the price action that we have right now, which I'm going to be analyzing right now with you guys on what I'm expecting for price to do in the right now. So can you guys see anything at the moment? I don't know if you guys can see this that I'm seeing right now. I want to see if anybody can spot it. I see the exact same thing that I just analyzed. I have a huge liquidity grab. This was on the daily, and then price again came down, right? And we had a breaker structure. Gonna do this breaker structure down. We have the monthly bankers candle, and just for reference, I do wanna highlight this low here as well. I'm gonna call this one bypass, just for my personal reference. And I'm gonna make it green because green is the color of the money. Awesome. So let's go back to the 4 hours. So we are on a breaker retest level, just like the other pattern up here. We have a huge liquidity grab. Let me just get a little bit closer so you guys can see. We have a liquidity grab, which on the 4 hour doesn't look as pretty in the daily, but the more you dive into the time frame, the more it gets different candle formation. So you have a liquidity grab, and then you have price slam down, and we just grab the low, and we just get to the most recent price action. So my first bias is pretty much this. Price coming into this area. I'm gonna just delete this into the kill zone. So this is what I am personally expecting. A nice flag, and then price to continue to come down, grabbing that monthly low and tapping the monthly bankers candle. So now that my bias for the most recent price action for me is done, what do? Do I just sit down and wait for the price to come here? You could, clearly, depending on what stages of a trader you are. You see here at EFX, we have basically come with a conclusion that there are 4 stages to a trader. The first stage is the getting to know yourself, getting to know the way you trade, taking most of the trades, like any trades that you see, you begin to take them, you begin to journal them, you begin to model to shape actually the kind of trader that you're going to be. And that is usually done through demo accounts. So please, if you are new to this, if this is your first time hopping on and you just see somebody say, oh, you need to short this, don't open up like, you know, live account and throw a short at this and be like, oh, but the dude said it. No. If you are on the first stage, demo, just to get used to what is happening in the market, gets used to your emotions, get used to your mindset. Because if you guys, like you guys obviously should know that trading is pretty much emotions. It's very easy to click on something and then the price goes your way and then you make money. But it's much harder when you see those money coming up and down. The second stage is the break-even stage. What the stage? That is basically when you are starting to see your trades working out, but you're still not seeing a good return, whether it is a weekly, whether it is monthly. So you are still into that deeper discovery stage. Then you have the third stage, which is the one that you're actually profitable, you're beginning to make money, you're seeing good return. And then you have the fourth one, which is the scaling plan, where you actually become millionaire, which takes some time, obviously. So based on where you are on a stage, you can get involved into this market here, which I am expecting, or you can just wait to get involved into this market here, which I'm still expecting. How do you know when to get involved? It's there are certain questions that you need to ask yourself. First off, is that what kind of time frames you are the most profitable at, or you're most comfortable with? Because obviously looking at it on a 4-hour, it might not be that easy to spot the pattern to take price higher into this area and then down into this one. But it's much easier to spot the pattern into this area for short, because we're talking about a daily candle, which is a quite huge amount of time that takes to make one. If you are instead on a little bit advanced, not a little bit, just a tiny bit of an advanced, oh my God, that didn't come out right. If you're a little bit higher stage, then you know that you can kind of go to the lower time frame and see what is happening into this area. So let's dive into this Euro USD and see what we can find here. So as I said, we have this daily candle, which I'm expecting price to sooner or later go up to. I have another area which I was looking at, which is this one here. I'm gonna color it as a cell. Let me make this one bigger so we don't get confused. So I have this area here that I'm looking at, but we'll explain why I am not too convinced about this area. And then I'm looking at all this pretty much just imbalance here and this imbalance up here. Sort this one out. Awesome. So what is happening recently? We had a strong impulse. We had another little impulse. We broke the low, and now price is coming higher. What do I do at this point? I begin to look at tiny lower time frames, not tiny, like go a little bit deeper into the lower time frames to see what is happening down here. Let's go to the 1 hour. This is what the 1 hour looks like. A little bit whack, like I like to say, but there are certain things that we can annotate and analyze here just to make sure that we can get the best out of the market. First of all, I would like to keep an eye on, I would like to quickly discuss this. If you guys were inside the, FXU, obviously you know that we had a very nice, I would like to say, signature pattern here. You can see we had a, let me delete this one. We had a price grabbed the low, and then we had an enormous push to the upside. This was so fast that I remember it almost came out of the screen up top. I had to grab it and put it back down into the screen because it was just flying off. And then price just did the absolute worst, and he just like completely smacked into the ground. So first things first, what people would say when they see this pattern is that, okay, we are definitely going to short from here. Or, okay, we are definitely going to buy from here. And I know people were buying into this area because, you know, pattern-wise, we're good. We ended up an expansion. We had a breaker structure. If we move into the line chart, you can see the breaker structure. And there was a signature pattern. Well, that's not just how it works. You need to factor in the higher time frame bias, the higher time frame market, the trend of the pair. Why was this one a bad decision? One, this low was still intact. Sometimes I actually do. This low was still intact. And that was a lot of money sitting down there. So when you have a pattern this close to that low, knowing that smart money banks need to fuel onto people's stop losses, you know, onto money to get to point A to point B, you know that this area is already a dangerous area to buy, even if the pattern looks beautiful. And I recall that there was like a 30-minute candle here. Yeah, 30 minutes. Yeah, 45 minutes. There you go. It was a 45-minute. Like, this is pretty. This is really pretty. You have an FU candle, you have an engulfing candle, and then several engulfing candles that comes right after it. So you'd say, okay, that's where the banks got in. Clearly, they did. But whatever was behind it was way, way more juicy for them to grab. And that was the little low that you have down here. And why is this important? Why is this low important down here? This is why. If there is one thing that I always keep in mind, and I know I tell myself, and it's kind of Dennis' words, is if smart money came inside the market, if banks got inside the market, where are they going to leave the market? They need a place to exit. If they come in and they grab money, they need to give this money, like they need to distribute the money. Where are they going to do that? The most obvious lows. This was an obvious low. They grabbed a ton of money here. They grabbed all of this, and this was a break and retest area. So, you know, we're talking about tons and tons and tons and tons and tons of like, you know, stop losses being hunted. So where are they gonna take this? Where are they gonna disperse this money? On the previous low. They aren't gonna just, like, you know, this little liquidity grab isn't gonna cut it. Isn't gonna make it that they just, like, you know, they got out of the position. No, they are still in, and they have to find a way to distribute them, and they just come down into this low. And look at the aggression. Look at the power of this. I'm telling you, this was like on the floor. Like I had to pick it up on the floor. I had to put it back in. So jokes aside, this just shows how tricky it can be, even with smart money concepts, because you can find signature patterns almost everywhere. I can open a 1-minute chart and I can show you like 200 smart signature patterns. That does not mean that it's going to work. You need to get yourself in a position of ride the trend. Imagine the trend, the market structure to be a horse. You need to hop on the horse. You need to, like, you know, on the horse. So after we had this enormous push down, we had a reaction which came from a huge liquidity grab and of the dispersion of the money, and also the fact that this area kind of made almost equal lows as well. So obviously, you know, that's another one. I think somebody just said, yeah, yes, Zach, yes. This area is more or less relative equal lows. You can kind of say like a double bottom. So after all this money being dispersed, we had a huge reaction. Price had a flag back into this area, and now we are seeing the strong impulses coming back into the higher areas. So there are a few things that I am looking at right now. I am keeping tabs on this area, but I am not 100% overly convinced with that. Can anybody tell me why I'm not overly convinced with that? Like, this is a strong area. We had a strong push to the downside. We have imbalance. We had FU. We probably can throw our fibs on this. Right, this is our kill zone right here. There is something in here that is really not looking good, in my opinion, for shorts. And this is why this is not an area where I would just be like, you know what, I'm a slap this right here. I'm gonna go, which is actually not really that good. This is like, you know, quite a big stop loss. The reason for it is just this. You have equal highs right here. We are on another break and retest. Exactly. Yes, Benita. We have equalize above, imbalance above, and we have a higher time frame FU candle. All of this, just by the look of it, make me want to like steer away from it. But obviously, if price do come into this kill zone and gives me like a pattern, just like the one that I previously showed you, then why not? But just entering this, just for the sake of it, because it's an FU candle, I think it was a 1 hour or is it 2 hours? I think something like this. Yeah, like this little 2 hour candle here. Let's make this blue. Just because you have an FU candle, that does not mean you need to take the trade. And this is the exact same thing as down here. You have an FU candle, which grab liquidity, not gonna lie, down here, it grabbed the liquidity, and then it shot up. Same thing, this one grabbed liquidity, quite a bit. And I think this was a previous day I grabbed as well. But this was the Asian session, sorry. And then it slammed down. We have engulfing, we have a kill zone, we have an FU candle, but there is just quite a few things around that wouldn't just, you know, guarantee the short. So what do? You wait for the pattern to come into this area. And if there is a pattern that you would be able to trade, then you take it. If not, you just wait. Why you wait? Because we are paid to wait, guys. Like, patience is key. If you take one trade a month and that trade gives you 10%, if you take it on a 100K account, that's 10 grand. If you're on FTMO, you cash out 8 grand. One trade. You basically like, you know, you're done for the month. You don't have to take every single trade. You take the one with the most probability. And setups feel like they're higher risk, like you wait for. Yeah, Zach, absolutely. You wait for the pattern, the same pattern that I showed before. You wait for, let's say, price stops here, and then it begins to break down, and then it gives you like the little pattern, they would like to say, the signature, and then absolutely, then it doesn't even have to come up here. It doesn't even have to. You can just trade into this and come back down. But talking from a risk point, this is just not going to make it. Why risk your money onto something that is not exactly what it's just risky? Like, why would you waste on that? So you will wait for a pattern. You will wait for something to happen. But meanwhile, you wait for that. I was personally looking for buys the whole day. And I had a very unfortunate event today that I'm going to share with you guys. So because my bias, actually, let me just go back to the higher time frame. So this is the most recent price action. So you have our swing to this, swing high to the swing low. We have our weekly. This one is our, make it green, like Danny likes it, with the little money. So this is our, this is a weekly low, right? So this is where a ton of money is being left by the banks. And then we have, so we have our weekly low, and then we have a structure being put in place for buys. So John, are you talking about the short up here, or are you talking about potential buys, the counter trend? Let's wait until you answer. So we have these huge areas I was saying where, you know, money has been left by the banks. We have this area up here where banks got involved. So we are looking for potential buys into these areas. And I don't, okay, so the short here wouldn't be considered a counter trend setup, in my opinion, simply because we are still trading bearish at the moment. We are getting to a point of being extremely low. So obviously I would be a little bit careful with shorting from this area in general, considering also the equalize here and the fact that we have the daily candle above. So just taking it off the hand, that is why I consider it to be risky. Counter trend, not so much, because we are still into the bearish environment. Counter trend would be taking the buys up here, all these buys. So what do you guys see right now? Like from the top of your head, can you guys see anything that comes up to your, just by looking at this? Actually, let me do 1 hour. Maybe it would be easier, the 1 hour. So just by looking at this 1 hour, what do you see? Can anybody spot anything in particular, or? Meanwhile, guys, answer, I'm gonna do this. Right, we had nobody can see anything that is happening right now on Euro USD on this latest price action. Nobody sees anything. Okay, so what if I do this? Maybe? Anybody? Okay, higher highs and lows, that's something. Yes, there is a flag. There was a flag right here, which obviously this flag, like it could have been traded. Like I'm pretty sure on lower time frame there was something down here, but that would have just made it more risky, because not like that, you know, price can just keep on going down. It doesn't necessarily have to come all the way back. We have imbalance all up here. We have imbalance. We just traded into this imbalance here. We have this price action over here, which was this morning. That's where I took my loss this morning by a little over of a pip. So what we can see right now is quite simple. We are creating reasons for price to come lower. So we are creating even further targets for us to short from whatever area we're going to see the pattern forming. But we see this 1 hour candle, which was done on London session, exactly London open, huge impulse pattern. And then price started to come back down. And then you had another impulse during New York session, which gave a potential bypass pattern. I've been looking into this area the whole morning, but there is something just quite not right that I don't particularly like. I want to see if anybody of you can spot it. It's just into this area here. There is just a little something that I don't like. Maybe if I do this. So we are on a break and retest level. Really powerful if you know how to trade them, as in you actually know when to wait and how to put yourself into the market, but sometimes can be very, very naughty. We had this FU candle here. I grabbed the liquidity, and then we had the push up. So I am currently kind of waiting for something to happen into this area. If price comes back down before moving up. Why is that? Because when you take in trades counter trend, so we are talking about the fact that we are in a short environment, and we're trying to take buys, you need to know when to phase out of the position, when to get out of a trade, knowing that it might reverse on you. So we are very close to the kill zone area here. We are very close to the 2-hour candle or 4-hour candle, whatever you like, into this area. So I wouldn't be wanting to, you know, keep on buying, even if I see like something like this, for example. I wouldn't want to keep on buying simply because I know that we're trading into a kill zone, which is available for shorts. So that creates a little bit more of a dangerous position to be in. So instead of that, I'll be wanting to perhaps EU to leave these equal highs and play this potential bypass pattern, which has a very nice 30-minute candle, or I think it was a 9-minute. I really like the 9-minute. There you go, the 9-minute candle. I would be really interested personally to see price come back down here and then shoot up, provided that we have the equalize saved. Why again is important? Because first of all, I need targets. I'm not just going to enter a trade just because I see a signature pattern. As I said before, there needs to be conditions for me to get involved into a trade. You know, there needs to be targets. There needs to be I need to be aligned with market structure. I need to be aligned with trend. I cannot just like, you know, enter every single signature pattern, as I said. So we would have our equalize, provided that they're not taken, as I said, which would also be daily high. We would have a higher time frame bias, which is coming into this area. And we would also have the daily candle, even above that one, that act as a magnet. But once again, once price is going to enter this kill zone area, I will be stopped actively looking for buys. So how can you take that into what you can potentially do yourself? Well, all of this, well, maybe not this one, but all of this pattern, like all of this price action can 100% be traded if you are that experienced and, you know, get into a position of becoming like, you know, stage 3 or above, and you start to double into the lower time frame, because you always have like, you know, opportunities that are coming for the counter trends. But it is very important when you know actually how to, you know, when to phase out, when to actually be like, okay, you know what, this ain't gonna, I don't think this is gonna keep on going up. But it's gonna, you know, actually come down. Would you not consider equals belows and a lot of liquidity? Yes, absolutely I would. And as I said, I call this one price action for like this. This for me is a future price action magnet. What do you mean? This is targets. This is targets that I will be targeting the moment we enter into this area, which is the kill zone that I was mentioning before, or if we keep on going higher, the daily candle above, just right above here. Obviously, I wouldn't want to be buying right now from here, simply because it's just too dangerous. But we have a pattern that has been formed here. The pattern has been formed in this area, which follows time and price. If you guys don't know what's time and price, basically, you know, London overlap or London open usually have a lot of volume coming into the market. And, you know, we have this nice 9-minute candle. So I would be interested in buying into this area. I wouldn't be interested in to buy this in this area because, you know, it's an Asian low, it's equal lows. It's probably on a break and retest level as well. Down here, you know, so there is definitely a lot of liquidity into this area. When you look at counter trends, and the reason why I'm going into the counter trend is simply because I thought it would be good to talk about it for this hour, which is coming to the end now, for Euro USD, because Euro USD, we just finished an expansion, and price could have taken a little bit longer to come up here. So instead of just like, you know, waiting, if you are a little bit more into the profitability stage, you can use these to get involved in the market. But ideally, as I said, I am waiting for one pattern to come into this area, or two, price to completely blow through it, and then keeping on buying until we reach the daily candle, in which we're gonna then begin to short. So this is my view on Euro USD. This is what I'm looking at the moment. This is the pair that I normally trade. I really hope you guys found value into this. I really hope you guys, you know, I wasn't steering away too much from the topic at hand. I don't know if anybody's got questions, if anybody's got something they want to ask me, you know, about this or anything else in regards of Euro USD, what they've been seeing, if they see something else. You know, I'm open to questions. Nothing? Nobody's got questions. Everybody is a great trader. Thank you, John. That was great. Thank you, Zach. Glad you guys are finding value. I was excited, guys, for this first time. Obviously, you know, it's my actual first time talking to people, trying to explain. It's always an experience. I don't know how Danny does it so easily. You know, I definitely need to get my game up here. Nobody's got any questions. Danny, have you got any questions? I don't know if you're still here. Do you trade full-time? Yes, Annabella, I am a full-time trader. I am totally funded, and I am actually going for more accounts. Thank you, Mark, for the great job. I really appreciate it. Really, really appreciate it. It means a lot to me, especially because I really enjoy doing this. I really wanna do this, guys. You know, help you guys out. Danny said they did a good job, so I'm happy. Thank you, Mia. Thank you very much. Thank you. Drop some fire emoji if you guys had some value. I'll drop one myself. Danny said a lot better than his first time. That if Dan doesn't make me happy, guys, like I'm over the moon right now. I'm blushing. What do you mean by this gold? As in getting used to like recognizing patterns, getting used to you know, just getting your eyes used to it. Kathy, is that your question? Because if that's your question, I've been at this, as I said, I started in August 2020. I always been around Danny. I firstly got into, like, you know, with him in the other group he was in. I was always in this Discord, and I was pretty much bombing him with questions daily. Not gonna lie, it took me some time, Kathy. I got funded the first time, it was back in June. I made my goal to be funded by then, you know, if you're aware of, like, you know, there was a prop firm that went down. I went down with them. That was extremely fun. But then in total, I would say it took me around a year, and it was a year of sacrifices. It was a year of I basically put this before anything else. I put trading before anything else because I knew that trading was my way out from just a life that I wasn't content with. I used to work in bar industries. I was working late nights. Me and my girlfriend both in London. We were just exhausted. So I was like, I told her, I was like, I'm gonna sacrifice everything we have right now so that I can get to a point where we don't have to sacrifice anything anymore, and we can just, you know, move, get out of here and just go wherever we want to go, which we did. Like, you know, we moved to a country and we just live in our life now, which is really good. And as I said, it took me a year, but it was a year of constantly being on the charts. I was coming home at like 3-4 a.m. in the morning from work, and I was just hopping on the charts and be like, okay, let me see if there is any trades that I can take, or if there is anything that I can do to, you know, to better myself. And, you know, those were extremely tiring and exhausting nights. And most importantly, what helped me was my demo phase. My demo phase, which lasted around 6 months, I think, was really important because just like everybody else, I guess, I put like after 2 months of trading, like, where I absolutely knew nothing, I put like 500 pounds into an account and I blew it when I first started. And I blew a FFCube account, and then I blew another one. And then I was like, oh, why is this not working? And then I had the chat with Danny. I was like, dude, are you demoing? It's like, well, not really. That's where there was the shift, there was the game changer was for me, was demoing, getting to know myself, getting to know my strengths and weaknesses, my SWOT analysis, and reaching the point of hopping on a chart and just be like, oh, look, this is a pattern. I'm gonna slap a pending on it, and that's it. And it's just the work they have been putting into this is enormous. And obviously everybody's going to have different times to work on it. Like, some people might be able to dedicate this more time. I was able to dedicate a few hours a night and probably a few hours in the morning, but that was not stopping me because I believed in this the moment I met Danny. It's like, dude, that's it. Like, teach me. I'm your man. So to answer your question fully, it all depends on like how much work can you put into it. The more you put, the more you're going to be able to absolutely crush it. Yes, Zach, if I look back at who I was a year ago and I look at myself now, I cannot even begin to see so many changes. Like, I used to, as I said, I used to work in a bar. So my awake hours were basically from like 1 p.m. in the afternoon until 4 a.m. That's where the bars were shutting. I was a manager, so I had to do the cash up, I had to count the money. So, I was really tiring, especially on Fridays and Saturdays and Sundays, all the weekends, all the NFP I missed, all the FOMCs, and stuff like that. So when I started to get into more of a mindset of, okay, I want to do this as a full-time trader, I had to make several changes. I've never done meditation before until I met Danny and until I met the guys. I met Joe. Joe is great on this stuff. Once I started to get around them, I began to find the value of meditation, and now how important is meditation for your routine. I meditate every day now. Every day let me turn this off so you guys have a beautiful face. There you go. I meditate every day. Every day, the same hour at 9 a.m. I sit down outside with my little coffee, my little espresso, and I meditate. That is such an important part of a trader's life because we deal with emotions every day. We deal with tons of just, oh my, what do I do? Do I do this? Do I do that? Getting involved in your trades and stuff like that. And, it affects your head so much. So mindfulness comes from, mindfulness from meditation is extremely important. And I started to do that around when I was still working in a bar, and that kind of changed the way I was actually working. I improved the way I was working, and improved my style. Sleep was important. I was sleeping like 5 hours a night, 6 hours a night due to the hours that I was working. I had to change that because I didn't have enough strength. So I began to completely cut off Instagram. I used to be addicted to the reels. You lay down in bed and then you just, you scroll those reels. Those things are drugs. Instagram reels, TikTok, Facebook, those things are drugs. They're just there to kill your head, and you can't stop because it's fun, because it's entertaining. But most importantly, because it fills up your time. When you don't know what to do, you're bored, you just open Instagram and you scroll. Whoever invented the reels and TikToks, that did make money for sure. I had to change the way I was eating. Actually, I had some issues with my health, and that was all because of the way I was eating. I wasn't absolutely eating properly when I was working because you don't have time for that. So I started to dedicate more and more time to myself, and I began to discover stuff for myself that I would never thought would have been possible. I started to actively go to the gym, and now I can bench press 100 kilograms. So that's amazing for me. But just adjusting the little things on your routine, it's really, really, really important. And there is something inside the FXU which is so good, which is basically something that I am doing lately is during a week, just take every day and then basically write down what are you doing each hour of the day. So from 10 to 11, what am I doing? From 11 to 12, what am I doing? From 12 to 13, what am I doing? And see how much does it cost me. For example, if from 12 to 12:30, instead of being on the charts or doing something for Daniel for EFX, I'm on Instagram scrolling, for example. So just start to analyze the time that you're spending, start to analyze what you're actually doing with your time, and see which one are the positives and negatives, and then work yourself around it. I now done the same thing that Danny has done. I created my own calendar where basically every day, I put down whatever I'm doing. I'm waking up at 5:45. I go to the gym, come home, eat breakfast. I do meditations. I do my daily affirmations. I trade for an hour and a half, and then I do EFX stuff, and then I trade again, and then I just do more EFX stuff. So putting that into a routine, I just completely changed the way I am. And if I would have told this stuff to Mirko 1 year ago, I would just be like, dude, you don't know what you're talking about. I'm never going to end up doing that. I'm a bartender. I work in a bar and stuff like that. So, yes, Instagram releases dopamine, and, the like, when they hit like on you, and then they see the fire emoji and stuff, it releases dopamine because it's acceptance. It comes from a point of being accepted. Somebody has actually found value in whatever you posted, and dude, you feel gratified with yourself. You posted a nice reel, and then you have a million views. I do not believe, though, that deleting it. I do not believe, though, that deleting Instagram is the way, in my opinion. I think reaching the point of becoming so strong that you know when to grab your phone and be like, dude, I am better than this, and you just put it down, is much better than just completely delete it, because it takes you a second just to reinstall it. And that is something that myself, I am still dealing with. Sometimes I still get caught up into that point of being on Instagram and be like, dude, I'm just going to scroll a bit. Nobody's going to say anything. But when you put into actual, time frame, like the actual time frame, how much you're spending on that and what you could have done better, it's huge. I calculate, I spent half an hour the other day on it. And I was like, this half an hour, I could have watched one of Danny's recordings, and then I would have been a better trader. Instead, now I am just dumber, funnily enough. So that's definitely something that, in the routine question, absolutely needs to be analyzed. Definitely look into, I think it was a guy, it was somebody in a book that I still haven't read, that said, make sure, you calculate the time that you spend doing certain things and see what impact they have on yourself. I think Danny was talking about it as well with the cleaning of the house and everything, actually paying somebody might save you money. So we are approaching the hour and 15 minutes. We had this little bit of mindset, which I really like. I like to do mindset stuff. I don't see any more questions. Danny has left me inside the Zoom meeting. He thought I was doing so good that it was just like, I'm out of here. He left me, which is amazing. As I said, so I don't see any more questions. So yeah, I hope you guys got value. If you guys enjoyed this, and if you're watching the replay, hashtag replay in the comments, tag me. If you have any questions, I'll be more than happy to answer your questions. If you want to know about what we do at TFXU, which you definitely should, send a message to Andres, tag me, tag Danny, and we'll, we will get back to you. So I hope you guys gonna have a fantastic day, fantastic rest of the week, and hope you guys are gonna make some money, most importantly. So yeah, guys, bye-bye.